In any bull market, central banks push particular assets higher up until they decide to let it fall. Every time this happens, the market corrects to a point where it loses at least half of the previous gains that it had. The trouble is that people usually don't get in at the bottom. They try to ride the wave. You came here for the truth, so let me unveil that for you. Today we are going to look at different indicators within the markets. Let's begin. I want to start with the S&P 500. You can see over the years that it has been gaining considerably. But when we separate the FANG stocks in particular, we can see that these are the stocks creating the growth. If I were to zoom out and show you global stocks, these global stocks have been stagnant when you exclude the US. If we include them, you start to see some growth. Then you look at specifically the S&P. Okay, we're seeing definite growth here. And then you zoom in even further onto the FANG stocks and you see where all the growth in this world are coming from. That's a fact. I've documented that many times before. So let's take a look back in the pages of history. 2007. You can see what Fortune magazine claims to be the greatest economic boom ever. 2007, right at the peak of this financial crisis. And then you start to see the information we see today. U.S. financial satisfaction hits 24-year high on a market boom. That's from 1026. And you'll see that home prices boom 10 years after the housing crisis. That's from 1113. These are things that are happening today, and you will always have an infinite amount of bullish people. But we get to a point where there seems to be no bears left, and that sentiment could change rather quickly. And that's generally the way it works. When everyone's a bear, then it's probably time to start becoming a bull, and the other way around. But right now, doesn't seem like anybody believes this market will go down anytime soon. Look at this. Just a further look into it. Fortune magazine, the greatest economic boom ever. That is July 12th, 2007. If you were the one saying that the market was going to crash on July 12th, 2007, despite all of the information that started to come out with the subprime crisis, you were considered a fool and you were ridiculed. And of course, many people, I should say a handful of people, were calling for it. And of course, they were ridiculed. And then as everything was coming down, they were interviewed on CNBC and Bloomberg and others. What do we do? What do we invest in? Where do we put our money? And it wasn't long after March 2009 where those people were laughed at once again. Because as long as the market's moving up, they don't really consider that it could ever come down. It's almost as if they get this sense of amnesia every few years. Now, let's take a look at this. Bad news for the bulls. There are now more bulls. And that is from 1017 as well. Market optimism hits Black Monday level peak, a potential significant danger. Surprising to see that type of information, significant danger being mentioned. So that optimism, advisor sentiment percentage bullish, is the highest since 1987. And it looks to be, let's say 65% here. I'm actually surprised about this. I would have been surprised to see anything less than 80%. I've never spoken to somebody individually in the financial industry who was a bear. I've never found it. One had recently become more bearish. That's about as far as it gets. And that's the way it works, because being a bear doesn't get you commissions, doesn't get you trailers. And that's how these individuals in the financial industry make their money. They either are paid programming, so they will sell whatever it is that they're paid to do so, any sort of asset, sell anything. They're obviously being paid. The articles that are being written on different websites, including Forbes, they are paid advertisements. And of course, you don't know that, but that's the way it works. And you'll see that the different advisors, financial, wealth planners and all this, they receive commissions based on your investments. So if they sell you something in particular, it'll make them more money than if they sell you something else. And at the same time, the more money that goes through the paper markets versus, for example, somebody saying, buy a gold bar and store it at home, they're not going to make any money off that. So they'll never, ever recommend it. And I've had many arguments with individuals, wealth planners, in fact, about this. Look at this. The S&P 500 PE ratio based on trailing 4-quarter earnings currently sitting at 24.8. This is the fake PE ratio, by the way. They don't calculate all of the PE ratios out there within any particular market. You're looking at the S&P 500. Actually, many of them exclude those PE ratios that are very high, which doesn't make any sense to me, but that's the way they do it. And let's just take it for what it is, 24.8. It's one of the very few times it has ever hit this level. And some would say the PE ratio is not accurate. We shouldn't view it. We shouldn't look at it. We shouldn't take anything, take it for anything at all. Maybe that's the case. It's just one indicator of many. That's the way I look at it. The S&P 500 is just one indicator. And if we were to see its real level, we would see it a hell of a lot higher. I read a statistic that I unfortunately can't find now, but I will definitely do a video when I see it, that it should be at least twice as high. So, wherever it is, I don't know. It's just that we are in a territory where these valuations of these particular companies are off the charts. They don't make sense. But that's the way it is. In any particular euphoria, you start to lose a sense of reality. That's what's occurring today in many markets, in fact. Look at the real estate market in Canada, for example. You have different cities like Vancouver and Toronto, which have become astronomical. The average person can't afford a house, yet the prices rise. So you'll see that in different bull markets, and then it becomes euphoria. Bear market repos. The S&P 500 bull market gains repossessed by subsequent bear market. So what you'll see is that over time, there are bull markets, there are bear markets, and as we go through a bull market, there is, of course, always going to be another bear market that will occur. And in that bear market, oftentimes we see half of that money being, repossessed, as they call it, or basically a crash. 50% of your portfolio may be reduced by 50%. In 2007, it was all. In fact, it was greater than that. And it's happened many times before where all of your gains are gone. 73, 69, 48, 38. It's happened many times before, but even being very conservative about it, you're looking at half. That's a 50% loss from where we are today. Would anybody like to see the Dow Jones hovering around the 10,000 mark? I think people would be wetting themselves if that happens. People would be on the window ledge, as we've seen many times before. So to call this, I've been criticized about many things before, but anyway, to think that it can't drop by 50%. Look, if the Dow Jones goes to 30,000 from this point before there's a crash. Okay, Dow Jones back at 15,000. Either way, it's going to be a problem. 50% very easily, very easily. I would say that because the problems of the previous financial crisis were never fixed, that we will see a much greater crash. When it happens, anybody's best guess. The price of keeping promises soars. U.S. state and local pensions see debts swell to almost $2 trillion. $2 trillion. And when we look at the pensions, I see nothing but failure. Nothing but failure. There's no way that these will ever be paid out to everybody that has been owed all of this. Now, what you're seeing here is the financial crisis, right? So everything, all that debt, in every way, swole up. And look at what will happen the next time around. The same thing. It just gets worse and worse. All of the projections that I have made today do not factor in another financial crisis. So just imagine that. They never do, in fact. It's the way it is, though. Well, that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you support the channel. I do appreciate that very much. I want to say thank you to all those who support me, whether through its donations in any way, whether you are supporting me through Patreon, or just from giving me a thumbs up, subscribing to the channel, and commenting. Whenever you comment, it really helps me out too, because that's activity on the channel. The more activity, the more people see the channel, the more people see the videos. So I do appreciate that very much. If you want to take a look at my books, they are at Amazon. Links are in the description below. Take care.